Hi, welcome to another edition of Mortgage Talks. I'm your host, Adam Hires. Well, help loan officers do 22 loans a month, 38 hours a week, and zero ad spend. All right, we have a ton on tap today. I've got, look at that, 12-week business transformation for you, specifically loan officers out there, mortgage loan officers. Go to hirescoaching.com. You can download this free copy, and this is the physical copy. I love it. I'm real excited about it. It's got the back cover of my Mortgage Talks on there. So yeah, it's really exciting to put that together. I love my marketing assistant, of course, helped me put the cover together because I'm not that good, but looks really sharp, really good. A lot of great content in it. Pick it up, go through it. Obviously, that's not the only thing I have in coaching, but it's really going to give you a good streamlined process of what it's going to take to grow your business. Ask yourself the right questions, be able to chart progress, be able to put a ton of material inside of this, and you're going to write in this book, and it's going to really help you transform your business. So the 12-week business transformation, I talk about it all the time, 12 weeks. We talked about it in my last podcast. We had the 12-week year, and why I go in 12 weeks, because again, things change very rapidly in business, and where we are in business, what's going on in the marketplace, tons of different things, rates, jump up and down. Look what happened in the last 12 weeks. Certainly a lot of shakeup. So it's very amazing to me. And what I want to talk about today we're going to dial in tactically. And that is when mortgage loan officers look at how many loans they want to close in, say, a 12-week period, they put a number on it. They're like, hey, I'm going to do 50 loans in the next 12 weeks. And of course, that's over 4 a week, which is great. That's 50 loans in 12 weeks is phenomenal. You're in the top percentile in this business. Now, if you're a business owner, you're an entrepreneur, you're a salesperson in a different space, this can absolutely help you. So think about this in your business. So as I'm talking to loan officers, I say, what do you want to close in the next 12 weeks? And they're like, I want to close 50 loans. But they have no idea of how many applications they need to take. Very simplistic, but that's just like somebody saying in the next 12 weeks, I want to lose 10 pounds, but they have no idea how much calories they need to take in per day to get there. How many times they need to work out to get there. So we have to understand the other metrics that are involved. It's great to say, hey, 50 loans or 30 loans or whatever you're trying to hit in that time period, but now how many applications do you need to take? And again, if you're in another business, how many people need to walk through your door? How many, whatever metric that you're going to look at for conversion, you need to understand how many the people you're going to have to talk to that are going to be interested in your services. So you have to look back at your last, if you did 12 weeks the last time, or if you just look over the course of this last 6 months, or you look out of the last year, get a good amount of data to say what's my closing percentage on whatever you're doing. So if you're closing, as a mortgage loan officer, you're closing 25% of the loans come in. For every 100 applicants, you're closing 25 loans, or maybe you're closing 30 loans in that period because the other ones can't find a home. They're not credit worthy right then. There's a lot of reasons why your closing percentage is not 50% plus, but if you're at 50% plus, kudos to you. But typically, a mortgage loan officer will close somewhere in 25, 30%. I get to over 30, 35% in closing ratio, but there's ways to obviously raise that. But over a 12-week period, you got to think, okay, just take the baseline of what you've been closing percentage-wise, and now backtrack and say, okay, now how many people need to apply for a loan? Very simplistic, but when I talk to mortgage loan officers and I say, okay, do you have any idea what your closing percentage is? They kind of look back and they're, okay, well, how many loans have you closed? Now look back at how many applications you had, and they're like, okay, well, I closed at 30%. I'm like, okay, do you realize that's 167 applications you need to take in the next 12 weeks? And that number ends up being more intimidating to people than actually the 50 loans, because they're like, wow, well, I only took 100 applications this last time, and and over the last 3 months, and I closed 30 deals, and I want to close 50 deals. It's like, well, you got to take 167 applications. Okay? And so that's the number that ends up being intimidating, because they go, wow, I've really got to get people to say yes and apply for a mortgage with me. And so that is the number that you need to look at. Now, let's uncover like where those sources can come from. So in this book, see if I can find it off the bat. So I'll struggle to find my own spot in my own book. What about that? So probably should have placed this, should have had a bookmark, right? So, preparation's key, guys, and I just did not prepare correctly because I just got excited about doing this. So I don't know why I do not remember where that is. So let's see here. I'll just skip right past it. So there you are. Okay. So in the 12-week business transformation playbook here, I have in here what you're wanting to project for the next 12 weeks. And when I look at the sources of business, and let's take, for example, that you want to close 50 deals in the next 3 months. And that's 167 applications that you need to take. Okay? So we're going to take that. You do your own number. You do your own calculations after here. That's your assignment. Go right now. I don't care if you're crushing it. I don't care if you're behind the schedule. Block it out and say, how many do I need to take? How many deals I need to close for the next 12 weeks? And now how many applications do you take? But first, you got to know what your closing percentage is. And so when you look at the sources of business, it's not by percentages. And so a lot of times people make mistakes. It's like when I used to run an Ashley Furniture. And it was like when people would sell a sofa, for example, and a customer would come up and say, hey, what's the lowest price you can, go on this? And it would say it was $1,000, the normal price. And the salesperson would already go like 20% off, which is $200, right? And so I would say, why'd you just go to 20% off? Could you have done even I can go $167 off, which is the exact number, by the way, which really, really works. It's a good mind trick, right? But the exact number will be more impactful, and you don't have to go to 20%. And so percentages are one of those things people just go to and say percentage-wise, and they don't really think, more into it than that. So we don't want to go by percentages and say, okay, I need 80% of my clients come from real estate agents. Now, you can start there in a baseline to see what your percentage is, but when you're looking at what your projected next 12 weeks is and how many you need 167 applications, you need to add them up. You don't need to just do percentage and say, well, I'm going to get 80% from this source. Well, how much is that going to be? And so when I look at it, I have the sources I have in this book are real estate agents, clients, family and friends, business pros, and financial planners. Okay? So let's delve into each. Let's say you have 167 people that need to apply with you. And let's say that your real estate agents let's just say they make up 80% of your business. I mean, really, that may not be a good percentage. We're going to go for that for now. And so you look at that and say, okay, well, that's, roughly 128, that's 133. 133 I need from real estate agents this go around. So you put 133. Now clients could do, okay, well, past clients, current client referrals, all that. You can add those and group those in. It could even be if you do ad spend. I don't like ad spend. Maybe, you're getting direct, whatever your clients there are, and you think, okay, how many, do I typically get? And put a number in there. Families and friends and business pros and financial planners. And so the key is really to push outside your comfort zone in each category. That's a real key, because if you have 167, your number, if you put them all the ones you feel like you can get in each of those categories, you may come up like 200, okay? Because you want to push outside your comfort zone in each, because this is about uncovering where you can have upticks in your business and have more applications. Because if, for example, the real estate agents are 133 and then you're on track, 4 weeks in, 3 weeks in, and you're on track there, and you have a certain target of clients and you're behind that, okay, it's like, how can I get there? And one of those categories could be right on target, some could be lower. And so it's always a way to go, okay, where am I missing? So through 4 weeks, let's just say you have 50 applications, and you're like, well, great. I'm ahead of target. I'm going to hit over 150 instead of 137. Well, that's great, but don't stop there. You think, where is it that I may be behind or lacking? So the business pros may be, well, I don't really have any business professionals really send me business. Okay, well, maybe you get out there and network with business professionals by Zoom, introductions, financial planners. Maybe you just, hey, listen, no financial planner is referring me business right now. Okay, well, can I get an uptick there and get a few extra there? So it's delving into each one, and ultimately, you want your total number, if you add these projection up, to be past the 167. Hopefully that makes sense to you, because that will always keep you pushing in each category, because one could be lagging. That's where you really, really push the, you push your, projections up, and you're able to go past or exceed or, at least hit your projections, because you may fall down some. You may have a real estate partner that, all of a sudden says, the heck with you, I'm going to go somewhere else, right? They're going to cheat on you and say, okay, I'm going to go somewhere else. But then you're hitting your clients, and you're hitting every other one. So let's say you hit every other category, and your real estate agents go down, and you still go past 167, you close your 50 deals, right? And that's how that works, because you have to dig into each one, and you want to have source of business from different places, right? Different buckets, okay? So if you're hitting some of these other categories, say you're really real estate agent happy, which is great. It's a great source of business. I talk about all the time. Well, if you're going into hard with clients, past clients in general, or you're going consumer direct with clients, you're messaging people, and then you're getting them, and you're able to turn them over to real estate agents, you're going to be able to gain more partnerships. You're going to be able to deepen the partnerships, etc. So these other ones, these clients, families and friends, business pros, and financial planners can feed back into your real estate agent's business and be able to, uptick there. So that's the biggest thing you need to look at when you're looking at what your projections are, and understanding that, the numbers are not going to lie. Listen, it's not like all of a sudden you're a 30% clip on your closing percentage, and you did last 12 weeks, you had 100 people apply with you, you closed 30, and then you think somehow you're going to get 100 and close 50 this time. You're going to go from 30% to 50%. That's not going to happen, right? Like, if it does, they ain't going to last long. That's going to be, you just praise the heavens that things worked out great. That's not going to happen, right? We obviously understand, and we'll go into how you can increase your conversion, and always try to increase your conversion, obviously. But you understand the point. You're not going to go from 30 to 50. And guess what? If you end up getting 167, applications, and you close at 40%, well, man, you just smoked your 50, right? Because now you're at, 67? So it's good to concentrate on, the number one thing is how many people you need to, apply with you. Now, you may be out there and you have you have 100 applications and you only closed 15 out of that, and you're like, whoa. Well, that's something you probably need to work on your closing percentage, but you're still going to need to know that I need 100 this time to close, say 30, if you're trying to close 30, and I need to go from 15 to 30%, which is a huge, uptick, but maybe that's your number one thing because you're closing way below industry average. And now you can delve into that, but you're still always going to have to know how many people are going to have to apply with you. So if you're in another business, you're out there listening to this, you need to understand that business owners just don't know that. And so, like, one thing, when I was running Ashley Furniture, it was called SPG, sales per guest. And so you knew exactly how many people are coming in your store, and then how much dollars per guest you're trying to hit. And so you knew, and then, obviously when they're trying to market, they knew, listen, if we're trying to hit a certain number, we're going to have to shove enough people in there. And so instead of 1,000 guest count, we're going to have to get to 1,200 guest count to get ultimately to the number we're trying to hit for the month, for example. And so marketing might work on that. And so that's the same thing when it comes to your business, any business you're looking at. And so you got to look at how many more people are going to apply with you. There's tons of ways to do that. If you're running a business, it might be marketing and say, hey, listen, you know what? I know that I'm closing at this percentage, and if I can spend this much ad spend and get 200 more people to walk through the doors, and I close at this, then that's going to ultimately make me money, etc. You have to delve into, if you're trying to do a certain volume, then how many people need to apply with you. If you're, like I said, if you're doing another business, how many people need to walk through your door? How many people need to call in? There's got to be some metrics that you have to know to reach your number, because if you don't know those numbers, you won't hit that goal. You can't just say, okay, I'm going to hit a certain number and it's just miraculously going to happen. And so the best know those. I track it on my phone the whole time. I'm pretty old school with that. I literally will, I have notes, and it's when I'll see people apply, they go through our easy app system, apply online, and when I talk to them, I see it triggered, they come through and they apply. I'm putting it in my applications. I have apps. I have every single month, it's charted for the last couple years, and I know how many applications have come through. And so if I'm at 12 for the month so far, for example, and I'm through 5 days as of yesterday, for example, and I'm like, okay, well, that's 2.4 multiplied by 31. I'm at 74. Well, I need to be at 83, for example. Well, 83 per month. Well, then I'm behind that, and I need to get more applications. And so I would rather, and say, here's the thing, like, I would rather someone get used to getting more applications first than I would with anything else. Because if you get the applications, people are going to buy with you. Like, you can not even be great at follow-up, and they will buy with you if you get enough people applying. I'm not advocating that you don't follow up correctly. We talk about that. We'll talk about that in different segments. But what I can tell you is that if you don't have that metric down, if you don't have that discipline down, then the rest will not fall into place. It just can't. It just can't happen, won't happen. It's not like all of a sudden you're going to, close 50 out of 50. Ain't going to happen. You're going to have people are not going to buy with you. They're going to shop you around for rate. They're going to, just say, heck with it, I'm not going to buy right now. Their credit's going to be all jacked up, So think about that. Uncover whatever you want to do. If you got this playbook, write down in here these different spaces that you can get people to apply with you, and then shoot for those, and then constantly look at those throughout every week, 2 weeks, 3 weeks, 4 weeks, all the way to 12 weeks of where you're hitting, how much more business you can get. You have to write that down and know what you're shooting for at all times. That is going to get you the business. And then you're going to know, that you're gonna hit your number. The thing is that I've been through weeks where I've not got a lot of deals, and my applications were last few weeks were just, man, they're up, and I'm following up with them. I'm feeling good about it. My applications are just going great, and I'm not even worried. Don't even care. I'm like, well, cool. I've not got that many deals this last few weeks. I'm not worried. Not worried a bit, because I know that's going to happen. All of a sudden, I'm going to, boom, there's 10 just like that in a few days, right? That's what happens. I am much more worried, much more worried of having 10 deals come through in a week and have only 10, say, applications that week. Because I know, and if I had 10 the week before, I'm like freaking out, because I know that I can't hit 20 or 25 or whatever loans in a month with that amount of applications. It's not going to happen. And so when you start having that mindset, that's the biggest thing that matters, people applying, then it's good. And here's a comforting thing too, guys, girls, is that if you have a bad day, or you feel like, oh man, that real estate partner left me, and you're going out there still pounding the phones, you're doing what you need to, and that happened, and 2 weeks later, you're still getting applications all the way around, and you're still hitting your projections on your applications. It's like, I'm cool. That's really what matters. If I'm getting the applications, that means people are trusting me enough to send deals my way or come back to me, etc. And that should give you comfort in what you're doing and comfort in what you're going to close for later. And it's such a comfortable feeling and a liberating feeling when you're like that and you say, listen, everybody loves me. I'm getting applications. Fine, I had a bad deal go there. Bad deal happened. Somebody left me. Cool. My application's there. I'm good. No worries. I can go about my day. I can smoke my cigar. I can have fun and live life. So there's a lot of comfort in knowing your metrics and blocking out all the noise and blocking out the emotions that goes along with this business. It's a very emotional business, and it'll tear you up, and you will be debilitated if you let it. So don't let it. Be comfortable in the numbers you have and the metrics that you're going after. And if you look at those and then how you can serve people at the highest level, it will always pay off. You will crush it. You will hit your numbers, and you ain't got no worries. You can live the life you want to live. You can make the amount of money you want to make, and everything will work out. Go and download my business transformation playbook today. Don't wait. You want to jump on a 15-minute call with me and uncover some of your business, just have a conversation, 15-minute conversation with me. We'll have a good conversation and see what we can do to help you in your business, and just have a little back and forth. You can call me at 859-302-2641. Email me at adam@hirescoaching.com. Love to talk to you. Even if I don't take you on as a client, always looking to sharpen the sword and just have fun with mortgage loan officers. Go out there, crush it. Remember, limited risk equals limited income. No choice for growth, legacy, impact.